Thanks for joining us at XM.com. I'm Christina Marujos, and you're watching the Daily Market Comment by Marios Hadjikyriacos. Fear has given way to greed, resulting in a stunning rally for stock markets and the currencies that had been most heavily impacted by the pandemic. The much better than feared U.S. employment report for May emphasized exactly that point and even suggested the recovery has already begun. The mounting signs that the global economy is healing helped the S&P 500 to recover all its losses for the year. Meanwhile, the Nasdaq Composite closed at a new record high. The FX market took its cue from equities, with the dollar staying under pressure, while the likes of the Aussie, Kiwi, and Loonie all climbed to pre-crisis multi-month highs. Even though we are seeing most of these moves reverse early on Tuesday, this looks mainly like some profit-taking, as there haven't been any negative news. What's most striking about the recent melt-up in stocks is the mountain of evidence that the rally has been driven mainly by retail investors and that a lot of the smart money has been sitting in the sidelines. The blockbuster U.S. jobs report probably changed that tendency, giving institutional players the green light to move out of cash and back into equities, which implies that the broader rally may still have some room to go. However, the next few days will be a giant test. The first challenge is the Fed decision tomorrow. While it's not expected to act, investors will be watching closely for any signals that the Fed is considering more unorthodox tools to support the recovery, like introducing yield curve control. If that's the case, the recent trends of stronger equities and a softer dollar might continue. Even more importantly, the next few days will reveal whether the U.S. protests have ignited a second wave of virus infections. If these massive protests weren't enough to generate one, that could add even more fuel to the euphoria that has gripped global markets. In Euroland, the single currency will also be driven by the outcome of Thursday's Eurogroup meeting, where investors are hoping for an agreement on the specifics of the recovery fund. This was today's Daily Market Comment here at XM.com.